Ladies and gentlemen, we're seeing this happen at the moment early on, but it's definitely happening. Building prices up and up. And what does that actually mean to our supply chain of property and property prices? We're going to tell you what we've seen over the years. Stay tuned.
I'm the ringleader, so listen up.
Josh Wapshot, the property economist. How are you this morning?
Good, Mark. How are you?
Good, good. What are you seeing?
Yeah, well, it's probably a topic you've heard from us quite a bit, but it's also re-emerged in the last week, especially one thing that I've seen come out. I've actually got two younger brothers in the trade industry, one being a plumber, and there was actually a mail out from Reece Plumbing, which is probably one of the biggest suppliers in Australia, where majority of their product ranges is actually going to be increasing, somewhere between 38%, a mass mail out to all suppliers. So forget about what we've just experienced since COVID in 21. It's about to get the next wave of cost, and this is probably all to do with the Middle East and fuel. So it's actually a lot of oil that's used in the manufacturing process for a lot of your PVC pipes, etc. So not only that, but then your supply chain as well. So obviously manufacturing and shipping and the movement of those transport of those products as well is all lying down to the bottom line here. And it's quite shocking to see that. I also had a friend of mine as well is in the middle of a build with a builder, and a builder's pretty much sent him an email saying about the original quote. I'm going to need an extra 30% on that, or we're going to have to pack up work if it's not paid. So, we thought we were over the worst of it. We thought it might cool down, but it looks like it's about to charge for a whole new increase, Mark.
Now, I think the automatic reaction, which I wanted to talk about this morning, is where I sort of got through with our business in COVID and with the team through COVID when stuff like this was happening was I always tried to look for the silver lining in the cloud. And the reason I suggest that there is always a silver lining in the cloud is building costs or money or energy doesn't get burnt or buried. It doesn't disappear. Do you know what I mean? So it goes into something else. So, when you saw computers in the year 2000, being introduced, the Y2K bug, everyone was going crazy saying computers are going to take over the world. It's going to take people's jobs. And then the reality is that energy died off, but then it got transferred over to more people in jobs in IT, more people in computer services. So it was sort of a transfer of energy. What I'm interested here is, okay, it's going to go up 30%, but where's the money going? Because it ain't being burnt or buried. And I think that's the exciting part to say, okay, we've just got to make sure we're on that other side of it and who are the beneficiaries of it. So, and then we're real estate agents. So how does that transfer to what does that mean to people in everyday property?
Yeah, so well, obviously, something else we've also talked about recently is sort of that flooring price that building costs are setting for property. You simply can't, go out and replace that same box, whether it be a unit, with the same amount of money. So what that means is these valuations on units or anything building wise is going to increase because you simply can't go and replace that same product for the same price. So I would say the silver lining here on that 30% increase in cost, it's simply like when you're manufacturing a product to sell on the shelves. If there's a cost increase that's come behind the scenes for a manufacturer, well, that's passed on to the consumer generally. So what I'm going to see here is that obviously people building, where it's a developer building new units, or it's a person renovating or building a new house. Obviously, their expectations on what they're selling that property for now encompass that extra 30% cost. And then what you'll see then is all those new products carry along the older stock. So you might not necessarily have had to renovate or build, because that newer stock on the market's doing the carrying for you. So silver lining, I guess, Mark, is like always in the Sydney market of housing, whether it's an Iran war or COVID, housing is the ultimate investment when it comes to Australia, and these sorts of things only fuel its value. Of course, it's hard, and everyone sort of hurts along the way, but silver lining, I'd probably say that's it. What would you think?
It just seems like the ultimate game of pass the parcel.
Mm.
It's like it starts with the fuel, then they pass it to the servo, then the servo passes it to the tradie, then the tradie, to the wholesalers, then the wholesalers pass it to the tradie, then the tradie passes it to the consumer, then the consumer charges more for their house. It's just like it just keeps passing the parcel through and through to everyone, and everyone still survives.
Mm. Yeah, definitely. I mean,
The road for 3
yeah, I think you put it right in terms of that pass the parcel, and it's always sort of follows through the chain or the life cycle, I guess, of those processes. But yeah, it's very, very interesting landscape with this all, because we already thought building prices were insane, and they're about to get even worse. And I guess a bigger question that stems from this as well is, where the hell is that supply going to come from? Developers at the moment, guys, Mark, myself, and a couple of boys, we obviously work on development side of the business as well. And all the discussions we're having with builders at the moment, or developers, is nothing's feasible. Nothing makes sense. Too much red tape. And now we're going to go chuck an extra 30% of pain to these suppliers of the market. I mean, there's going to be a real big gap here. I mean, if this continues, less and less developments, less and less supply, and we haven't seen immigration halt at any rate at all. So, you're
But
talking about
Josh,
pressure.
we're all in it. We're all in it together.
Yeah,
It's
I
gonna
know, but
be
yeah,
it's gonna be okay. Remember COVID? We're all in it together. It's
yeah.
all gonna be okay. But that's the cheesy version. I think the School of Hard Knocks version is, if we go back to COVID, if you go back to GFC1, if you go back to GFC2, if you go back to hard times. So you're suggesting hard times, we're suggesting hard times. But on the other side of it, when you go back from experience, we push through it. You can't just do what you've always done. You've got to be agile. Do you remember COVID? You've got to pivot.
Mm,
We're all in it together. We've got to pivot.
yeah.
But, I think one of those things is, you've got to be early on the trigger, like we were with COVID. I think you've got to make smart moves. I don't think you get angry at the game. You get smarter at the game, and you make those shifts in your life and in your business. I personally saw it through school holidays. I was on the highway from Queensland to Sydney. Not many people drive. Like, people are pivoting. People are saying, you know what, I'm not going to jump in a plane. Fares are expensive. You know what, I'm not going to do a long highway trip. So I think we just get a little bit smarter. I spoke to the boating guys in Pittwater. Boats are good again. And I'm like, huh?
Why are they good again?
Busy. So I'm
Really?
like, what do you mean? He goes, when
They're
it
not
was,
leaving.
they're not jumping in a plane. They're saying, you know what, just for the next year or two, we're going to be a bit cooler we're going to cool the jets, and we're going to do more boating and boat share, or whatever that may look like, jet skis, whatever. Do you remember what happened in COVID? Like, I think we're doing a gentle version of we're primed a bit already. Like we knew what we did back then, so we're doing a little bit of it again now.
Yeah, 100%. And yeah, it is really important to to look for opportunity in these times, because yeah, I think it's it opportunities that don't always arise. So it's very good that you have the positive spin on everything and attitude, because what are you going to do about it? Go home and cry, or you're going to be agile, swift move, and create an opportunity out of the situation. So yeah, I guess it's very much so how you look at it. But arming yourself with all the information out there, I think that's the first step in knowing what's truly going on, and then being, like you said, able to pivot.
Look, the stock market, when it shits themselves, there's these ballsy people that buy stock. Craziness. But often when everyone's zigging, they're zagging. And I think
Mm.
now with property, you shouldn't be buying. It's not right. Let's see what's going to happen. And then you get the balls, the everyone zagging, and then you get the ballsy people, bang, get in there. And then people go, oh my God, you were so smart buying at the beginning of COVID, in the recession, in the fuel crisis. You were so smart for buying. You did really well. So I don't know. I just think you've got to have a good, long, hard look at what markets have done through. I'm not suggesting it's a crisis, but through crisis moments, how we got through it, and emulate that again. And I think with property, it's going to be a big winner again, because in uncertain times, people seek certainty, home over your head.
Yeah, definitely. I think that even though this may come across as negative, if anything, I think it should give people a bit of stability into the years ahead, because I think, like a lot of the fueling of unit prices we've seen over the last 12 months specifically, it's been some massive areas. Like a mate, for example, just purchased down in Bronte, and over the last 12 months, 17% down there. I think a lot of that is fueled by these new development and what it costs to build a box these days. So you can sort of take this as, if it's going to cost you 30% more to build the same thing, well, that will translate to house prices over the coming years. So you can sort of almost use this news as a bit of a stability in the back of your head, knowing that you can't replace that product. People need somewhere to live, a roof over their head. It's a necessity. And in the Northern Beaches, it's tightly held and a lifestyle center. So there is always buyers out there, even in these times. Like we said, those people that are zagging when everyone's zigging. So I think it's you always got to find the silver lining, have that positive outlook, and look for the opportunities.
Look, if it wasn't fuel prices, we would have found something else.
Yeah, you're not wrong.
There's always a crisis.
Always. But yeah, I think it's very interesting that, yeah, a lot going on, a lot to take in at the moment. But one thing's for sure. Like we were just looking at something earlier. Last 100 years, as an average, what was it? Every 8 or 9 years, property has doubled in the Northern Beaches. So there's been plenty of crises in between there, and look where we are now.
Yeah. And guys, if you want to reach out for that data, or let us know, Northern Beaches, I think it's very, very impressive. It really it sets off a lot of calm, I think, when you see how the beaches property has performed, and Sydney, across Sydney, how it's performed. I think it just calms the farm a little bit. You go, okay, it's a good investment, do it.
Yeah, exactly right. Awesome.
Thank you, The Economist.
Thanks, Mark. Thanks, guys. Have a great day.
Cheers. Bye-bye.